Hey guys, Max here, and this is your daily market for yesterday, Monday, the 20th of December, I think. I can't remember. Of course, the market opened after the weekend. It didn't do very well, and we'll talk about why, along with a couple other topics touching on things like democracy in Hong Kong. So let's just get right into it. So the markets were pretty red across the board. It was a tough day for investors. The S&P 500 was down 1.1%, and that means that the last 3 days of trading were the worst 3 days of trading for the S&P over the last 3 or 4 months. The Nasdaq, of course, fell as well, dropping 1.1%. Tesla is down back to where it was before its huge pump to $1,200 a share on that Hertz news. Other big tech was down as well, like Apple and Microsoft. There were some big gainers, Netflix and Pfizer notably, which are sort of pandemic stocks. But on a whole, the markets were down. The MSCI World Index, which tracks companies all over the world, fell 1.4% as well. Yields on bonds actually advanced a little bit. 10-year Treasuries now sitting at 1.42%. Oil slid a little bit to $68 a barrel, down from $70. Gold slipped about 1% in price as well. Crypto had a good day and rose 5%, but that was after a bad day where it fell 5%. So it's still sitting around that mark that it's been for the last week or two. Bitcoin at about $48,000, Ethereum at around $4,000. Altcoins just tracking the broader market as well. Nothing really special happening there. So that's what happened, but why did this happen? Well, there are the usual fears of Omicron variant and increased restrictions around the world, slowing markets in general with consumer sentiment dropping, interest rates rising and inflation getting higher. But there are also new fears, especially in the US, or only in the US really, around the Build Back Better bill looking dead in the water. So let's start there with the Build Back Better bill and what's going on and why are the markets dropping. Well, it was a huge $2 trillion economic agenda that Biden has been pushing for quite some time now, and it's been one of his big aims. It's really been his staple target, and it looks like he's going to fail. It's not going to get passed. He's not going to get it pushed through, and that's a big miss for him and his presidency and his administration. And in my opinion, it pretty much perfectly summarizes his presidency so far as well, of, lots of promises, lots of plans, but nothing really coming to fruition. Now, there are lots of people saying it's basically dead in the water, that it won't get passed at all, but there is a chance it might get passed in early 2022, but with some fairly big changes, and that's not guaranteed even then. The bill had a lot of different ideas that don't really match up with each other. They don't make sense being put in a bill together, but it's just the way American politics works, that they try and force everything through in one big go. But the really big thing and the important thing is that there's a huge amount of money behind it, and that money is economic stimulus. Now, the bill has already been cut down in size a huge amount from $3.5 trillion. They planned to raise taxes to pay for that $3.5 trillion originally, but that was very unpopular, so it started to get watered down to where it is today. Now, Joe Manchin is the man who is stopping this from really going through. He's been trying to negotiate with Democrats for months now, but they haven't really been playing ball, and they just kind of guessed he would roll over in the end, but turns out he wouldn't. He isn't going to roll over, and he isn't voting for the bill, which means, the bill is basically dead in the water, at least for the end of this year. The markets obviously don't like this. That's why they are red. It's sort of a signal that economic stimulus has run its course and that we're maybe returning to a real economy which isn't inflated by government bills or spending or quantitative easing. That means less government support in the future, less free money, tougher business climates, less consumer spending, lower earnings and lower valuations. And that's the really big thing. You then combine this with the fact that the taper is accelerating, it's doubled again, and the 3 planned rate hikes in 2022 are going to be coming. And markets are wondering whether the party is over altogether, and they're starting to panic a little bit on that. Now, to be perfectly honest, it's quite easy to see why they're panicking, but this is all their own fault. Institutions have been egging asset prices on for months now, trying to squeeze as much profit as possible out of the markets while they still can. Lots of people right now are trying to sway public opinion and convince everyone that this bill is good, that it's going to improve America and help everyone, and that voting against it is immoral or something like that, and that Manchin is bad as well. And they're doing this all to try and hopefully change public opinion on it enough to sway people's votes and get it passed anyway. But the truth is against these people. Most of this bill is unnecessary, and it would actually probably end up being harmful to the country as a whole. Some people are claiming that it would help to ease inflation, but that's just a lie. It wouldn't. The idea is there are some infrastructure improvements in this bill. There are some areas where supply side constraints might be eased a little bit. And in the long run, that would help to reduce inflation. Of course, if we could, keep more truck drivers on the road or shorten delivery routes and things, that would reduce inflation in the long run. But these things would take years and years to have any sort of meaningful effect. Meanwhile, the injection of money into the economy and this increased government spending into the economy would stimulate demand immediately and cause inflation immediately. So no, this bill wouldn't help inflation at all. Manchin has also made a point of saying that he wants to be fiscally responsible, and I'd like to congratulate him on saying that. Good for you. As I've been saying for almost a year now, inflation is here and rate rises are coming. The US government already has crazy amounts of debt, and it's already going to struggle with debt servicing once these rate rises come. Spending another $2 trillion is just an awful idea, and it will come back to bite them in the arse. Decades of steadily decreasing interest rates has led the US government to really believe that the money they've been spending is free and that there are no catches and there are no caveats and there will be no problems with this free money. But rates are rising for the first time in a long time, and it's time to pay the piper. There is no getting out of it this time. Either everyone suffers under super high inflation or under a government that can't run services because their debt burden is too high. There are two evils here, and one of them will win out. Which one? Well, we don't actually know yet, but either way, there is pain to come. Now, the only thing that can really change what might happen over the next year or in the future is if the economy takes a really bad turn for the worse in 2022 and the US government tries to come to the rescue again with quantitative easing, 0% rates, and loads of government stimulus. Now, I don't think this is necessarily likely, but it is definitely possible, and if it does happen, it would result in inflation continuing to soar and just a bigger crash when the US government finally pulls everything away again. To be perfectly honest, I think that the fact that this bill isn't being passed is good and necessary. Props to Manchin for standing his ground and doing what he thinks is right. This isn't going to be easy. It may stimulate a flash crash. It may cause pain for a year in the markets, but in the long run, this will prove to be the right decision. Now, moving on from there, we have Tesla to talk about, of course. Now, they have had a tough couple months, but this is after they had an incredible month in October, so this isn't really anything awful for the stock. Now, if you remember, back in October, the rental company Hertz had just been rescued from bankruptcy and out of the blue announced it would buy 100,000 Teslas in what turned out to be not even a real deal. Nothing had been signed. It was just kind of announced to be a sure thing, but it kind of wasn't. Now, there was a little bit of controversy around this, but whatever. The point is, on the announcement of an extra $3 billion of revenue, Tesla's market cap rose by $300 billion, which is a little bit absurd and clearly an overreaction. Then Elon started selling his shares. I've made it clear that I don't think this is because he's lost conviction in the stock. There are other reasons at play, but him selling his shares increases selling pressure and it has forced the price down a little bit. It's hard to know exactly by how much, but it has had an impact. Of course it has. And tech stocks in general have been struggling, so Tesla has been falling pretty consistently since that peak and has just dropped below $900 again, meaning it's back where it was before the Hertz deal. Now, the news of Build Back Better, that bill being dead in the water, has hurt pretty much all electric vehicle companies, as support for these companies is a little bit less likely in the future now. Nikola is down 7% on that news, Workhorse is down 9%, and Lordstown Motors are down 8% on that news. This isn't terribly surprising. The valuation of these companies is no doubt high, and this isn't great news for them, so we would expect to see a rather volatile shift. But that being said, that doesn't mean I'm happy to see this happening. I do feel bad for those people who bought Tesla at $1,200 on believing all the hype and FOMOing in. I do feel bad for people who have bought Nikola at a $120 billion valuation, and for people who have bought Lordstown Motors at all. Now, the other big names, Amazon, Meta, Microsoft, Apple, those types of names, they've struggled too, dropping between 1 and 2% yesterday. Now, this is especially bad for the Nasdaq because without these big companies and their gains over the last year, the Nasdaq would have actually fallen about 30% this year, as all the smaller tech companies are getting completely hammered. It has been a tough time to be a stock picker in Silicon Valley, and a tough time to be Cathie Wood as well, as these sort of small tech companies like DocuSign promising ridiculous growth forever are a staple of her funds, and they've performed awfully this year. We've got some indication that the Great Resignation is continuing to expand and will grow into 2022. In the UK, some new data suggests that lots of people are walking away from high-paying jobs, and the same thing is apparently happening across Asia and still happening in the US as well. This means that the labour shortage is probably going to continue, which will impact the supply chain crisis and stop it from improving, as well as cause higher wages and increasing inflation further in that way. It really does seem that inflation is just going to keep chugging along, keep getting worse, and we don't really see any respite in the near future. Moving over to the east, and we see that Hong Kong has had an election for the first time since the CCP changed the way things work, and democracy is basically dead in Hong Kong now. Voter turnout was ridiculously low, and it is rigged in favour of the CCP, and I'm not trying to seem like a conspiracy theorist here, it is literally openly rigged in favour of Beijing and against democratic candidates. The CCP don't even try to hide it. I think the details, but don't quote me because I'm not 100% sure, I haven't checked this, is that 80% of the potential democratic seats for elections have been removed, leaving them with just 20% of what there used to be. Basically, there's far less democracy. Even if every single person in Hong Kong voted for a democratic candidate, the CCP would still be able to pass any law they wanted because there's just no power in democracy anymore. It's a real shame to see this happen, especially with the long history that Hong Kong has had with liberalism and democracy, but the CCP is power hungry and this was always going to happen. Thankfully, we are seeing some support from the West towards Hong Kongers. The US and the UK in particular are changing rules to make it easier for Hong Kongers to emigrate out of Hong Kong and to the West, and I wish those people who choose to do that all the best. The Maxwell trial is mostly over and the jury is deliberating, so we should find out what the result of that is before long. She's obviously the woman who worked with Jeffrey Epstein and helped him recruit girls and children for their sick doings. She is pretty much the epitome of evil, and it's clear that their connections rise to the absolute highest level. It will be interesting to see what comes of this, but the reality is that thousands of elites will and already have gotten off scot-free from what they have committed. They were complicit in all of this, as well as Epstein and Maxwell as well. Sometimes there is just no justice in the world. And of course, Epstein didn't kill himself. That is it for the day, guys. We will be back tomorrow for more. Obviously, not long until Christmas now, but we've still got a little bit more work today. So stay strong, stay stoic. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments as well. And on top of that, if you join before December ends, then the next month will be entirely free. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to give over your credit card information or anything like that. So if that sounds interesting to you at all, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.